In this short investor video, I'm going to introduce you to Helix Exploration. It's a rare early stage helium investment opportunity with projects in the highly prospective Montana Helium Fairway in the US. So Helix Exploration has two appraisal projects, the Igneous Dome and the Rudyard Project, both in the Montana Helium Fairway in the US, which is a tier 1 project location. The historic drilling at Igneous confirmed proven gas in all target reservoirs with a P50 unrisked resource of 2.3 BCF. The Rudyard project has a contingent resource of 0.48 BCF, which has an in situ value of 250 million. The company have a highly skilled management team, CEO Bo Sayers and Exec Chair David Minchin. Many will know David from his time at Helium 1, where he took it from a private company valued at less than 5 million to a valuation of, I think, circa 170 million at its peak. The Igneous Dome project has robust economics. We'll talk about that a little bit more later, but headline numbers are 303 million NPV with just a 19.7 million capex requirement. They have a 2-well appraisal drill, as I said at the start, and these are slated to happen Q3 2024, so basically any time now. And the company have a fast track plan to bring those wells into production on drill success. Now, the Igneous Dome project is the company's flagship asset, and it exhibits the perfect geology for a helium discovery. In fact, the Igneous Dome was previously drilled and it discovered nitrogen, but it didn't test for helium. And helium, is often found with large concentrations of nitrogen. That's been the case for other successful discoveries in the Montana Helium Fairway, and probably why the company are excited about the prospects of finding helium there. The Igneous Dome, as I touched on earlier, has robust scoping study economics of an NPV8 of 303 million and just an initial capital outlay of $19.7 million to get the processing plant up and running and get them to production, with a net revenue of 605 million over a 29-year life of mine. So it's a decent project duration, and the plan going forwards will be to do an 8,000 foot drill through the stacked reservoir targets. As I said earlier, that's August 2024, so that's pretty much around about now. We should see news flow coming through on the commencement of drilling shortly. Their first production, they reckon they're targeting within 12 months of a successful drill. And that's not a long time at all, really, when you consider, where the company is now, its market cap. Some of these projects can take sort of 3 or 4 years to get through to production. So this is just a reflection on the management's experience, and they know how they can get this product out to market quickly. They're targeting 55,000 million cubic feet per annum, which would generate them 40 million in free cash flow per annum. So some very healthy cash flow numbers there. Now, the Rudyard project, which isn't too far away from the Igneous Dome, is a discovery with commercial quantities of helium. The adjacent wells have tested up to 1.3% helium, and the contingent resource is 0.48 BCF. The company believe, however, there is significant exploration upside where they could increase this resource. But that's not the immediate plan. The plan would be to drill an appraisal well immediately after the Igneous drill to run an extended flow test, which would be over a period of circa 30 days. And the aim of that is, at the end of it, is to convert their contingent resource into reserves, and again to fast track production using the appraisal well for production itself. So a bit like Igneous, really, in terms of the fact that they want to be able to convert this resource into cash flow very quickly. Now, the company have done a nice peer comparison in their presentation, and if you look at Helix, their two helium assets combined could be producing anywhere from between 55,000 to 80,000 million cubic feet per annum. And you can see on the graph there's a number of helium companies with their outputs and their market capitalizations. Slightly out of date because Helix actually has made a move in terms of market cap and is now 25 million. But the salient point there to note is if you take someone like North American Helium, it's got a 1 billion plus market cap and it's producing 155 mmcf per annum, and Helix are targeting 55 to 80 mmcf per annum, and they're just a 25 million market cap. So you're talking about potentially a third to a half of the production of North American Helium, but with a significantly lower market cap. So of course, there's work to do for Helix, but if they can, make the discovery and get that into producing helium, then you can see the market cap potential going forwards. So the investment case and share price catalyst then, I guess something as speculative investors we're all interested in and why we're here. They have 2 high impact appraisal drills coming this quarter, and it's going to be Ingomar first with the Rudyard Project following immediately after. The company is saying August this year, so pretty much any time now. The company have a proven management team, CEO Bo Sayers, he's an industry expert, and exec chairman David Minchin, who led Helium One from a private company to a company valued at 170 million at its peak. The company have a fast track approach to production for both projects, selling to tier 2 distributors, bypassing industry majors. The guys at the helm, they have lots of industry contacts due to their years of experience in the industry, and they know how to get this product out into the market quickly. The Ingomar Dome project, as we touched on earlier, has robust economics, which should produce cash flow circa 40 million free cash flow per annum, with an incredibly low initial capital outlay, as I touched on earlier, of $19.7 million. The company is now a non-binary play, i.e. it now has 2 helium projects, whereas one back 3 months ago or so, it only had the Ingomar Dome project. So this significantly de-risks the investment case because it's not, if you like, a one-trick pony anymore. And I guess the last thing to mention is helium itself. I mean, it's the place to be given the current market dynamics. There's a lot of nervousness around the supply of helium across the globe. The US, in fact, have now stopped exports of helium, and it's definitely becoming a critical mineral on many countries' lists due to its increase in usage. So, I expect helium plays, not just Helix, but across the board, to be getting a lot of interest. But obviously, Helix has a very compelling investment case given the timelines that they're quoting. So anyway, I hope you enjoyed this brief investor video. Please do your own research and manage risk accordingly.